So what I want to point out is probably focus on these 2 months. So the current month is November right now, right? So November, December, usually we have November is like a bottom, and then all the way into December, and then starting off the December, they'll entering into a rally mode. So you can see there's a rally, and then continue all the way into January to February. So look at this rally. So it's very nice rally. So from November to December, all the way to this January and February, usually the bullish month. So take a look at this. So this is the average return by month for the percentage. So you can see in general, so November, December, and also January and February, they are the positive side. So about 1 to 2%. And that's based on past 25 years of the data. So let's take a look for the next chart. Okay, so let's discuss about the context. So because the cycle analysis, although is like for the past 25 years, like taking the average, using the data, we can get those sort of the pattern of gold, like from November to February is usually very bullish. But what about the context? So what are the gold doing at the moment? What's the phase of the gold? And what's the structure of the gold? And this is very much important despite that we have the seasonality to help us a bit. So at the moment, if you are a pattern trader, you probably can spot this, right? Cup and probably handle is forming. And look at this. This is a monthly chart and stretch all the way back to 2011. So from 2011 all the way to now, like 10 years of data. So in terms of the structure, we have probably, I would say, not so much a trending market. If you want, maybe it's just a sideways movement. But we can further divide this market into this. So this is a localized or just a distribution. So right after a buying climax, so this is like a typical, sorry, not TP, this is like a parabolic run up. So this is a parabolic movement. Subsequently, it's just forming a distribution. So after that, here's a sell off. So this is trend. There's a range distribution, and this is an accumulation range. And this is sign of strength rally. You can say this is probably the trend. And subsequently at the moment is sideways, another range. So we have 3 range and 2 trends. Okay. So during this, what happened is that we just want to find out a bit more for the bullish season, November to February, because I don't really want to have this sort of the bullish season only during the bull run or during a very strong uptrend. So I just want to see what happened if it is a sideways market. So first of all, I have already highlighted the November to February period. So this is pretty much flat. This is a negative. So let's look at this. Right after a buying climax and subsequently the results out from the November to February season is flat and also is negative. So this is definitely conflict or totally different from the seasonality. And subsequently after that, sell off, and this is another one. So this is positive, 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 another one, positive, positive, positive. And during the markup, we have another one, positive. So within this trading range, they're all positive from November to February. Okay, from this uptrend is positive, and right after this, the current trading range is showing one negative, and this one is currently unfolding at the moment because it's November. So far we have an up bar, so it's still unfolding. I'm not sure where what will turn out. So it could become a positive or it could be negative. So at the moment it's still unfolding, but it's a bullish sign because it's a up bar at the moment. And if you just look at all this is flat, negative, another negative. So in total, we have 3 negative out from this big range or the big routing. So I think this is an encouraging sign, and especially if we read into the context, because this is a after a buying climax. So we have these 2 seasons not working, and this is also another buying climax, or I would say this is a buying climax out from the sign of strength rally. So the context between these two is different as well. So right after that, this one is not working. So we have a negative here, and at the moment, it's probably turning up. So in terms of a seasonality, I would say is working quite well, especially during this last 10 years. So this is another encouraging sign for the bull, for the gold. And next one, so let's look at the gold here. Let's take a look at gold. So GC. So this is gold futures. So if we just look at the daily chart of the gold futures, I think is even important because so far we have determined that from November to February is the bullish seasons based on the data of past 25 years, and we have determined the overall structure for the past 10 years, the big rounding bottom. So now we just want to zoom in of the current range. So how is this current range look like? How's the structure? So right after the climatic run up, buying climax, whether this is a accumulation or this is a distribution. So let's take a look here. So out of this, definitely I viewed it as probably a downsloping type of the trading range and a bit of the shakeout type of action here in March, April. Subsequently, that could be another range by itself. So if you trade all of this, is probably this is A, that's B, and that could be a C in range. And if this is the case, then what we are expecting is a sign of strength rally. So the sign of strength rally could probably take us to, I hope to see 1960. So this is the immediate resistance level. And if we can overcome that, then probably the previous all-time high level, somewhere around 2100. So in terms of a structure analysis for this, I think this is probably a phase C, and we are probably in a sign of strength rally for the gold. And if we just zoom in a bit further, so this is another principle within a principle. So that is another like climatic run. So that itself is another trading range, and we probably have this as C, this LPS, and is now on the way out already. So I think that works out quite well. So nevertheless, in terms of the overall structure, I think that we are just broken out of the channel or the downtrend line, and it's probably in a sign of strength rally. And definitely for the volume wise, I see that is supply has been decreasing. So look at this. So decreasing of supply, decreasing of supply. So especially the last portion right here. So supply is definitely a lot different from the past 2 segment. So that is in general a good sign to justify that that could really be a phase C. And then we need to confirm it with this possible sign of strength rally. So when the rally actually started, let's zoom in a bit. Okay, so what we see here is, look at this. So demand is increasing, and we definitely see quite nice increase of the demand on the way out. So I think this is another bullish sign for gold. So when we combine all these factors like the seasonality, November to February, and also for the context-wise, we are in a big routing or the cup and handle time for the past 10, 11 years. And all the way down to the daily chart of the gold is probably in a sign of strength rally or at least phase C, that's probably in a D. All this points to probably a very bullish direction for gold. So definitely keep an eye of the gold. And let's jump back to the PowerPoint slides. And here's a PNF target. So I've done quite a few segments, but what I want to draw your attention is that this one first. So this is a very quick count from the backup action. So that is probably the sign of strength rally that we are looking at, somewhere around 2050, which buoys up nicely of the previous swing high level. So somewhere around that. So if this is a sign of strength rally, then I think the first target that we can see is just to go back to test the previous swing high, somewhere around 2050. And if this is hit and materialize, it's probably have another reaction, and we can probably expect some form of the higher target, 3,000. So based on this orange segment, this segment is about 3,000. And also, if we want to stretch it further for the aggressive calculation, it could go all the way back to about 5,000. So we still have further aggressive count in this chart here, but just by using this aggressive count for this backup action all the way to here is somewhere around 5,000. So there's certainly a lot of the fuel in the tank and a lot of upside for the gold futures. So it's great for position trading, investing. So whether you want to hold a physical gold or whether you want to just hold I think the simplest one is just to get hold of the gold ETF, GLD. So GLD is the gold ETF, or you want to try GDX. So GDX is probably the gold miner. So these two are definitely very easy to trade or just buy and hold, and with your stop loss just below the swing low level, or maybe you want to just manage it with the daily chart. So it's totally up to you. But certainly based on the point and figure targets, there are a lot of the upside. With the first target is somewhere around previous swing high 2050, followed by 3,000. Okay,